So my pitch will be Kulicke and Soffa Industries. KLIC is the ticker on the New York Stock Exchange. They're based out of Singapore, but they have operations all over the world. And what they do is they manufacture wire bonders. Wire bonders are a tool that puts completed semiconductor chips into packages, basically putting chips onto, motherboards, onto PCBs. And this is sort of the classical 1990s type packaging, but it's evolved a lot since then. It's not the most advanced form of packaging, putting chips into a package, but it is one that more than 80% of chips worldwide that are manufactured use. So your iPhone, processor is not going to use wire bonding, but there's a lot of components on that motherboard that do. And so the reasoning behind this pitch is because they have a 90% market share, above 90% market share in wire bonders. And this packaging type has 80% market share in total packaging. So the reason that they are there's a risk and a reward here, right? So the risk is that the semiconductor cycle completely turns and their earnings crash. A lot of times they're sort of the canary in the coal mine for the semiconductor industry. And so that's what the big fear about them is. But on the upside, they are trading, roughly at a 10x, 11x their earnings currently. And their free cash flow generation is insane. They have zero debt and something like 15% of their market cap in cash on the balance sheet. So very well capitalized, prepared to do buybacks and dividends. And the main market, being wire bonding, is one that is probably the tightest in the entire semiconductor industry. So people talk about PCs and smartphones potentially slowing down, memory slowing down, but the area that no one's talking about slowing down is these microcontrollers that are going to be in every object that we touch, in our life. Whether it's something that has LEDs in it, that has a microcontroller to control that, and a power management IC to control that, all the way to, your car's microcontrollers. It's what's stopping cars from being produced. So wire bonders are a big bottleneck in increasing production here. And as microcontrollers, get pervasive into every aspect of our life, sensors collecting data everywhere, wire bonders are needed to put those chips in packages. And then they also have an angle into mini LED panels, which is what Apple is starting to use in their iPads. They're going to announce some MacBooks next week with mini LED panels. And then lastly, they have an aspect with battery production. But the long and the short of it, because we don't have much time to get into all this new interesting tech, is that they've got a huge opportunity in terms of being undervalued, because classically they're considered the canary in the coal mine, but actually they're going to be, secular growth.
My question was for Dylan, and I might have missed this. It dropped a lot recently. It's a long-term holding of mine, and I have some good conviction, but I was wondering if you could explain the recent drop.
Sure. So that's what I was trying to refer to with the canary in the coal mine analogy, but I don't think I had enough time to really dive into it. But in general, in the past, KLIC has been viewed as the canary in the coal mine because their earnings just shoot up and down like crazy, hyper cyclical, because the semiconductor industry as a whole is very, cyclical. We go through these peaks and troughs. So that's sort of the reasoning. That's the initial reasoning, right? So over the last month, 2 months, the semiconductor industries, the stocks have sold off, all of them, right? Some of them, a little bit, some of them a lot. And because KLIC is viewed as the canary in the coal mine for the industry, they are being sold off the most, despite the fact that the weakness is coming from other sectors such as PC demand and potentially mobile in China and memory in general, like DRAM and NAND. So those aren't exactly the areas that they operate in, but because they have that position as the canary in the coal mine, they've been sold off the most.
Got it. And I remember when I was first hearing about them from Christopher Seifel, he was talking a lot about how, this was probably, I guess, 6 months, 8 months ago, I don't know, but he was talking a lot about how they have the longest lead, they know their orders ahead of time for a longer duration than they ever have, which I thought at the time was more protective, but I guess maybe that's just within the, you know, hyper cyclicality.
Yeah, so the lead time thing was that they have the longest lead time of any semiconductor equipment firm. You know, right now I think their order backlog as of Q3 or Q2 earnings, the most recent earnings, sorry, is something like 1.1 billion, and their, you know, their revenue potential is about, I mean, their revenue model has about 1.5 billion of revenue a year. So this is, you know, pretty much a year. And then depending on the product subcategory, it's more than a year, less than a year, obviously, but that's sort of the lead time angle. And yeah, so like with any cyclical business, you know, semiconductor being one of those, and this being perhaps the most cyclical business of them all, it's a dangerous, you know, to sort of get these swings. But then again, you look at it and it's like, how are you, can it really be that bad given the, you know, the fundamentals of this?
I think you cut out. He's driving, so maybe that's why.